Welcome to the Deep Dive. Our mission, as always, is to cut through the noise. We take your sources, could be articles, research notes, whatever, and really pull out the most important bits of knowledge.
Mm-hmm.
And today, we're going to show you how we do that, how efficiently we can apply this deep dive idea to, well, a pretty information-rich document.
Yeah, it's a good one.
But first, we thought we'd equip ourselves and you with a toolkit for actually getting to the heart of things.
That's right. So our deep dive today uses two seemingly quite different sources. One is this great collection called Podcast Power Questions, really designed to spark engaging talks and, uncover deeper insights.
Right.
And the other, a very detailed 2007 letter to shareholders from WESCO Financial Corporation, penned by the legendary Charles T. Munger.
Okay, so quite a contrast. A set of questions and a dense financial letter.
Exactly.
But our goal here is to uncover maybe some surprising facts, some essential insights from both, and really show how having a structured approach helps cut through even, well, pretty dense stuff like a Munger letter.
Definitely. So let's get started.
Okay.
We'll begin with that toolkit for insight, the resource called Podcast Power Questions, Inspire Engaging Conversations. And like you said, it's not just for podcasters. It's, I think, a really valuable tool for anyone looking to gather information better or just have more meaningful conversations.
It could be a meeting, an interview.
Or even just chatting with someone, yeah. Trying to get beyond the surface level.
And it's not just a few questions, is it? This list has, what, over 60? Covers a huge range of topics.
It does. It's quite comprehensive.
So it feels like a structured way to be curious, almost.
Yeah.
Gives you a kind of framework.
Precisely. And the real value, I think, comes from that structure.
Yeah.
It helps prompt more thoughtful answers, reveals deeper insights, because it groups questions into specific areas.
Right, and you can see that in the way it's laid out. It's got these categories like general personal growth and life, business and entrepreneurship, investing and finance, creativity and productivity, tech and innovation, lifestyle and wellness. And then it even throws in some bonus deep reflective questions.
Yeah, the ones designed to really make you think.
Exactly.
And what's really insightful about these specific questions is how they're designed to avoid just, yes, no, or surface answers. So for instance, instead of just how's it going, asking something like, what's one habit that changed your life?
Oh, yeah, much better.
Right. It just opens things up for, real personal stories. Or in the business section, what's the biggest challenge you faced as an entrepreneur? That gets you real wisdom, right?
Yeah.
About resilience, problem solving.
Yeah, I can absolutely see that. And thinking about the Munger letter later, a question like, what's your investment philosophy? I mean, that cuts right to the chase, doesn't it?
Absolutely. It's a core question.
And like, for creativity, where do you find creative inspiration? That pushes for a different kind of answer, too.
It does. And from the tech category, something like, what technology do you think will change the future most? It encourages that kind of forward thinking.
Or even practical stuff, like what's a self-care tip everyone should follow? Useful, actionable insights. And then those bonus deep ones, like what's one life lesson you learned the hard way?
Ooh, yeah. Those can be very revealing.
Definitely. They reveal character, hard-won wisdom.
So what's the takeaway here for you, the listener? Well, it's about connecting this idea, this toolkit, to your own life. Learning to ask better questions isn't just for, professional interviewers.
Right.
It's kind of a shortcut to being genuinely well-informed, whether you're prepping for a meeting or trying to get up to speed on something new, or maybe you're just curious. Having a framework for asking questions can unlock those aha moments and maybe stop you feeling swamped by too much information. It's about being sort of strategic with your curiosity.
Yeah, it's the framework that helps you turn raw information into actual knowledge.
Right.
Exactly. So now that we've got this Power Questions toolkit in mind, let's try and apply it. Let's deploy it on, well, one of the densest, most insightful documents you could probably find, Charlie Munger's 2007 WESCO Shareholder Letter.
Okay.
Because what better way to test the art of asking questions than to see how a master like Munger answers them? Sometimes implicitly, sometimes, as we'll see, with surprising directness.
Yeah, this letter is, it's fascinating. It gives you a really transparent, incredibly detailed look into WESCO's performance and their thinking back in 2007, comparing it to 2006. It's just a goldmine for pulling out financial and business insights from, one of the sharpest minds out there.
Okay, so let's dive in. If we were asking that sort of headline question, what's the big picture for WESCO's financial health in 2007? What did the top line numbers tell us? say, compared to 2006?
Well, okay, the consolidated net operating income, that's the figure that generally strips out investment gains, saw a small increase, went from about $92 million in 2006 up to roughly $93.4 million in 2007, so about $13 a share. Steady.
Okay, steady operating income.
But the overall consolidated net income, that tells a more dramatic story. It jumped quite a bit, up to nearly $110 million in 2007, compared to that same $92 million figure in 2006.
Ah, okay. That is a noticeable jump in the total net income. What was driving that difference in 2007?
Yeah, the key thing there was a pretty substantial chunk, about $15.7 million, or 2.21 cents per share in realized investment gains after taxes.
Oh, okay.
And those just weren't there in 2006. It's also worth remembering all these figures are after tax, and the per-share numbers are based on about 7.1 million shares out. So yeah, operations were stable, maybe slightly up, but some smart investment moves gave it a real boost that year.
Got it. So steady operations, but boosted by investment gains. Okay. Now, Munger then breaks WESCO down into its, four main subsidiaries, each with its own story. Let's maybe unpack them one by one, starting with WESCO Financial Insurance Company, WESFI.
Yep, WESFI, based in Omaha, primarily reinsurance. Now, for years, it had been involved in various risk pools managed by one of Berkshire Hathaway's insurance subsidiaries.
Right, Berkshire being the parent company, owning 80% of WESCO.
Exactly. And in 2007, WESCO actually increased its participation rate in some of those pools.
Okay, but wasn't there something even bigger mentioned for WESFAC? Something that really scaled things up?
Oh, absolutely. This was huge. The WESFAC board approved what Munger called its most significant reinsurance contract ever, starting January 1st, 2008. It was a retrocession deal with National Indemnity Company, INCO, another Berkshire company.
Okay, a retrocession, like reinsurance for a reinsurer.
Pretty much, yeah. WESCO basically agreed to take on 2% of all of Swiss Re's property casualty risks for the next 5 years.
Wow. 2% of Swiss Re, that sounds enormous.
It was potentially massive. Munger estimated if volumes held up, this could mean annual written premiums for WESFAC somewhere in the region of $300 million.
$300 million? That's a huge step up for them.
A game changer, potentially.
So what were WESFAC's financials looking like just before that big deal kicked in?
Well, their underwriting gain, the profit just from the insurance side, was around $1.4 million in 2007. That was actually down a tiny bit from $1.65 million in 2006.
Okay.
But their net investment income, that saw a healthy rise. Went from about $53.7 million up to nearly $60 million in 2007.
Right. And this actually leads to one of Munger's really candid insights, doesn't it?
Yeah.
About the nature of this whole business.
Yes. This is one of the most fascinating bits, I think. Munger just comes right out and says it. Accounting and casualty insurance, especially reinsurance, is inherently uncertain. He says the financial statements are, quote, more mere best honest guesses than in other industries.
Best honest guesses. That's quite a statement from a chairman.
It really is. He points to the difficulty of forecasting future outcomes, the extra layers and reporting losses in reinsurance. It's not just him being blunt. It's a really important warning for anyone looking at insurance financials.
Yeah.
It highlights that even with brilliant minds involved, some financial statements, particularly in complex areas like long-tail insurance, they're just inherently more estimation than hard fact.
So the real takeaway is understanding where that uncertainty is in a business is just as important as looking at the numbers themselves.
Exactly. But despite that uncertainty, WESCO was doing okay. Their combined ratios, that key measure for insurers where lower is better, were 93.9% in 2007 and 94.0% in 2006. Munger calls these much better than average.
Okay, so profitable even with the guesswork. What about their float? That's key in insurance, right?
Absolutely. Float is basically the money insurers hold between collecting premiums and paying claims. If you underwrite profitably, it's essentially free money you can invest.
Right.
WESCO had about $94 million in float at the end of 2007. And Munger fully expected that new NICO deal, the big one, to significantly boost this float, giving them even more capital to invest. It's a huge engine for insurance companies.
Okay, very clear. Let's switch gears then. Subsidiary number 2, the Kansas Bankers Surety Company. Kansas Bankers.
Kansas Bankers. Yeah, owned by Wes Ike. WESCO bought it back in 1996 for about $80 million cash. Munger specifically points this out as a very satisfactory deal. He notes its tangible net worth now exceeds what they paid for it and credits the strong management team.
Good acquisition, then.
Yeah.
And what's their specific area? What do they insure?
They have a real niche. Insurance products for small and medium-sized community banks, mostly across 38 states, mainly in the Midwest.
Okay.
And their products are quite specialized. Things like deposit guarantee bonds, that's coverage above the standard FDIC limits, directors and officers liability policies, bank employment practices policies, even things like errors and omissions for bank insurance agents, and internet banking theft insurance.
Wow, that is specialized. How are their financials looking?
Pretty good. They'd significantly cut back on the amount of reinsurance they were buying themselves, ceding less risk. Went from nearly half their premiums down to about 15%. And since 2006, Berkshire companies were their sole reinsurers. Their underwriting gain in 2007 was around $5.6 million, which was a nice jump from $3.5 million the year before. Investment income also ticked up to just over $5.3 million.
And their combined ratios.
Excellent, though Munger calls them volatile but favorable long-term. They were an impressive 55.1% in 2007 and 73.8% in 2006. Really strong underwriting.
Very strong. Okay, fascinating niche. Let's move to number 3. Court Business Services Corporation. Court.
WESCO bought them in February 2000 for $386 million cash. They're the big player in what Munger calls rent-to-rent, furniture rental.
Rent-to-rent, meaning people rent it with no plan to ever buy it.
Exactly. Think office furniture, people relocating temporarily, that kind of thing. And they're also apparently quite good at selling off the used furniture afterwards, like a rental car company does.
Right. How was Court doing financially around this time, 2006, 2007?
Well, revenues were around $396 million in 2007, which was actually slightly down from $400 million in 2006. And after-tax profits also saw a dip, going from about $26.9 million in 2006 down to $20.3 million in 2007.
Okay. And I remember Munger being incredibly honest in the letter about Court's beginnings under WESCO.
Oh, yeah, classic Munger candor. He just lays it out there. Admits that when they bought Court in early 2000, they, quote, were poor predictors of near-term industry-wide prospects for that rent-to-rent business.
Wow.
Yeah. He says the business declined significantly after late 2000. Points to the dot-com bust, 9/11, a general slowdown in new businesses starting up. All of which, he says, hammered Court's operations.
Hammered. That's strong language.
It is. It's a real lesson in forecasting, isn't it? And admitting even the smartest folks can get the short-term picture wrong.
Absolutely. So a tough start for Court under WESCO.
Yeah.
But how did it evolve? Did things improve despite those challenges?
Well, Munger says that despite those early missteps and the fact that Court is definitely affected by economic cycles, the company is now stronger than when they bought it. They started a new rental relocation service back in 2001, and that's apparently expanding. They're focusing marketing more on businesses and government agencies that need comprehensive global relocation help.
Shifting focus.
Exactly. And they even expanded geographically, buying a company called Room Service Group in the UK in January 2008. So strategic moves, trying to build a stronger, maybe more resilient business.
Okay. That brings us to the 4th and final major subsidiary, Precision Steel Warehouse, Inc. And Munger's assessment here sounds pretty grim.
Yeah, Precision Steel, based in Chicago. The numbers first.
Yeah.
After-tax profits of about $2.9 million in 2007, down from $1.2 million in 2006. And Munger notes these figures are adjusted for things like LIFO inventory accounting.
All right, those technical details.
Which itself hints at the kind of old economy business it is.
And what's the fundamental problem Munger identifies, the big challenge?
It's stark. He says the key challenge is a long-term, really systemic drop in demand, and it's caused by Precision Steel's customers losing out to manufacturers outside the U.S.
So it's their customers' businesses that are struggling with global competition.
Exactly. And that has led to what Munger calls a serious reverse in the actual physical volume of steel they handle. And he says, point blank, this is not likely to disappear.
Not likely to disappear. Again, just brutal honesty in a shareholder letter. Can you give us the numbers on that volume drop?
Yeah, they're striking. Their service center volume went from 69 million pounds back in 1999.
Okay.
Down to 46 million pounds in 2006.
Wow.
And then down again to just 39 million pounds in 2007.
That's a huge drop in physical volume.
Huge. Now, he does note that price increases, steel prices went up about 66% since 99. Those helped keep the dollar volume somewhat level despite the collapse in physical volume.
Right.
But Munger doesn't expect that to last. He basically says WESCO considers Precision Steel's results not a satisfactory investment outcome compared to what it used to earn back in the late 90s. And he believes, quote, more decline for Precision Steel may lie ahead.
It really does sound like an elegy for that part of the business.
It almost reads that way, yeah. just laying out the harsh economic reality.
But even in that really tough situation, Munger finds space to praise the CEO.
He does. He specifically credits CEO Terry Piper for doing an outstanding job leading the company through these incredibly difficult years. He even acknowledges Piper has no magic wand to fix the competitive losses from overseas.
That shows a real fairness, doesn't it?
Uh,
Recognizing leadership effort even when the tide is against them.
Absolutely. Assessing the situation clear-eyed, including the human element.
Okay, so those are the four main businesses.
Yeah.
The letter also quickly mentions a couple of smaller things, right? The leftovers from WESCO's past.
Yeah, very briefly. There's MS Property Company, a small real estate subsidiary holding the Pasadena HQ building and some land for condo development. Munger says its results are immaterial.
Okay.
And then there's a category of other operating earnings loss. Mostly rents from that Pasadena building, interest income from cash held outside the insurance subs, minus corporate overhead. Again, not a major factor.
Got it. So let's pull back a bit now and look at WESCO's overall balance sheet, and maybe Munger's broader financial thinking here. What did the net worth picture look like at the end of 2007?
WESCO's net worth grew. It reached $2.53 billion, which was $350.66 per WESCO share at year-end 2007. That was up from $2.4 billion, or $337 per share, the year before.
And that growth came mainly from?
Mainly from that net operating income we talked about, after paying dividends, and also appreciation in the value of their investments.
Right. And there's that really interesting bit Munger discusses about deferred income taxes. He frames it almost like an interest-free loan from the government. Can you explain that?
Yeah, this is a classic Munger-Buffett insight, often applied to insurance float too. But here he's talking about deferred taxes on unrealized investment gains.
Okay.
He points out WESCO had about $322 million, or $45 per share, in deferred income taxes on its balance sheet at the end of 2007. In effect, the company has the use of that money. It hasn't paid the tax yet, so it feels like an interest-free loan.
Right. Sounds like a good thing.
It is, but, and this is the crucial Munger point, he clarifies, it's not a permanent advantage for shareholders.
Yeah.
Because eventually, as securities are sold, parts of that loan get paid back, the tax becomes due.
Right.
So he argues the present value of that advantage is logically much, much lower than the full $45 per share showing on the books.
Mm-hmm.
It's a really important nuance about not overstating the intrinsic value based on a balance sheet number like that.
That's a great clarification. What about their actual investment strategy at this time and Munger's view on future returns?
Well, they made some big moves in late 2007, putting about $802 million net into marketable equity securities, but they still held a lot of cash and equivalents, about $565 million at year-end.
Okay.
But Munger's outlook for future returns on shareholder equity is notably subdued. He states pretty clearly they are unlikely to be as attractive as in the past.
Why is that?
It really comes down to size, both WESCO's size and, more importantly, the size of its parent, Berkshire Hathaway. It just gets harder and harder to find really attractive investment opportunities that are big enough to actually make a meaningful difference to the overall results. The law of large numbers kicking in.
Right, the challenge of deploying huge amounts of capital effectively.
Exactly.
Now, as we think about WESCO's overall philosophy, Munger makes this comparison that just leaps off the page. It's incredibly direct, talking about WESCO versus Berkshire.
Oh, this is maybe the most remarkable part of the whole letter, just pure, unvarnished Munger. He states, flat out, that WESCO's, quote, business and human quality is not nearly as good as Berkshire Hathaway's.
Wow. Just says it.
Just says it. And then he doubles down, making it crystal clear. WESCO is not an equally good but smaller version of Berkshire Hathaway, better because its small size makes growth easier. He's explicitly telling shareholders, don't make that mistake. We are not mini Berkshire.
That is just astonishingly direct. He's managing expectations with, like, a sledgehammer.
Pretty much. He goes on to say that each dollar of book value at WESCO continues plainly to provide much less intrinsic value than a similar dollar of book value at Berkshire Hathaway.
Mm-hmm.
And crucially, that this quality disparity has, in recent years, continued to widen in favor of Berkshire Hathaway.
So Berkshire's getting better faster than WESCO is.
That's the clear implication. And then he caps it off by basically advising shareholders not to judge the relative investment merits based on current stock prices.
Yeah.
It all comes back to his core idea. Focus on intrinsic value, business quality, future prospects, not the ticker tape.
An incredible insight into how he viewed those two entities, even though one owned 80% of the other. Amazing candor.
Truly unique.
And just as a final financial detail, What was the news on WESCO's dividend at that point?
Oh, yes, the board had recently increased the regular dividend slightly from 37.5 cents per share up to 38.5 cents per share.
Okay. And that, I think, brings us to the end of our deep dive into these sources. Wow. What a journey from thinking about how to ask good questions to dissecting the answers, explicit and implicit, in a really complex corporate letter from someone like Munger.
It really does show how breaking down something dense, using that structured inquiry approach we talked about with the power questions, lets you pull out the core insights. You get a much clearer picture.
Yeah.
From the WESCO letter, we saw, the mix of businesses, their specific challenges, their successes, the importance Munger placed on transparent reporting, even when the news wasn't great.
Right. Especially the precision steel part.
Exactly. And those just fascinating, completely honest insights from him on capital allocation, intrinsic value, the guesswork in insurance.
Yeah.
Just invaluable stuff.
It's definitely a powerful reminder to always try and go beyond just the surface level information, isn't it?
Absolutely.
So here's a final thought for you, the listener, to maybe chew on. Think about all those different businesses and challenges within WESCO, and thinking about the power of asking really well-crafted questions. What's one area, maybe in your own life or your work, where you could apply this kind of deep dive approach? Where could you dig a bit deeper to find some new understanding, or maybe just spark a more engaging conversation?